12th January, Thursday, MAO with Cal once again. Why Goldman Sachs kept calling for higher crude oil price? Don't they know that if crude oil prices go up, the entire CPI data will go back up again and everything will go back to square one? So this is really something mind-boggling, and I've been thinking what's the reason. And based on what we're seeing right now, other than we have China coming back, but we have this White House have been dumping a lot of reserve oil into the market to lower down the inflation. So all this thing makes me think that probably they may know something that we don't know. That's what today I'll share with you about what is happening, and tonight's CPI will be very, very important. Let's see. Alright, once again, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now let's recap what happened last night. Okay, the Dow Jones closed 260 points higher, okay, and the Nasdaq notches the 4th day of gains ahead of the key inflation report. So why Nasdaq is going up? Well, because if the CPI data is lowering, then Wall Street expecting that the Federal Reserve will lower down or slow down or even cut away interest rate hiking. So the market is buying on that expectation. But I really don't think so. To me itself, it's pretty clear cut that Jerome Powell will most likely increase interest rate by another 50 basis point in February. Then maybe in March itself, we may see a 25 basis point. I don't think he'll do a 25 so fast. Right, and there's something that I suspect that because yesterday when he was talking about in the market, something just made me think of something else. I'll share you later on. So what we can see right now is that the Apple up by 2%. Okay, a bit of the PowerPoint. Let me just do some arrangement here itself. Okay, let me do this. Okay, here we go. All right, Microsoft up by 3%, Google up by 3%, Apple 2%. Amazon was a stunner, up by 5%. And I covered this, right? Amazon is a buy a couple of days ago because a lot of people are calling for buying, and that's why Amazon is higher. But the thing is even Tesla was up by 3%. I'll cover about Tesla shortly, but I noticed that Tesla shares are back to 1, 2, 3 again. Not too bad. Now, I think that this price is a good time for you to take some profit, okay? I'm repeating myself. 1, 2, 3 is a great time to take some profit, okay? I think that this Tesla share, you can consider it to go down again back to about 109 or even $100 level. Okay, so take note of that, yeah? So I'm going to write it down for you. Now, Tesla is 123 right now. I think it's going to go back down again to maybe 109. Okay, I'll put it down first, all right? Let's see whether what will happen next. All right, so basically the economist has polled in, and they say that the expected CPI data to be about a modest 0.1% in December. So that means that it's about 6.5% level, all right? So the thing is this, all right, the last time was a 7.1, 7.3 level. So now the market is looking at the 6. So basically, right, it's going to be a very, very important, big move on the report tonight. And of course, everybody is really expecting the number to be between 6.5 to even lower. So I'm going to say this up front. I believe that it will be a 6.8 for tonight, okay? I know that I've been wrong on my CPI reading, so I'm not going to say that I will be right, but I just feel that it's too much for time being. We know that the gasoline price is down by about 10%, but it is not equal like that because you need to include the shelters, okay? So that is one reason that I'm holding back right now. Okay, so let's look at this, okay? Probably, of course, another reason why the Wall Street was being pretty happy because now some medical report says that Omicron XBB 1.5 does not have the mutation known to make people sicker, all right? So this actually helps the market a little bit more, and they feel that, right, maybe later on China's side will recover and the whole world economy will recover. So that is another reason for that. But I think largely it's because most investors and traders are largely defensive position, which means they already hedged their position. So they may need this bear rally, okay? They need a bear rally because if everybody is too much in the market shorting, right, then it will be one-way traffic. So probably some funds or people came in to short the stocks out to bring some breath air, positive light into the market, all right? So if tonight's CPI do go below 6.5%, wow, apparently the JP Morgan guys are looking at a 3% upside. Wow, that's a 3% upside. Now, if you ask me, I really don't think that way, but let's hope for the best, okay? Right, so now this is from JP Morgan, all right? So they are looking at 65% chance it'll be between 6.4 to 6.6, and that will bring the S&P higher by 1.5 to 2%. Now, do note, JP Morgan have been calling for their prediction over the last few times. All I can say is that when they say it's going to be up, it came down. When they say down, it went up. So I leave it for you to decide, okay? All right, to me, it's like when everybody is so optimistic, so bullish itself, right, I kind of be very skeptical on this. So let's hear from this gentleman. He actually talks about why the market is actually higher. Listen to him.
Trash fire. If you have been using indicators to trade, throw them away. Because the only fire. So I still think a lot of what we're seeing here is the end of tax-related selling pressure coming off, and just a little bit more optimism about the year to come. I think everybody fully understands what the headwinds are at this point. There's been a ton of pessimism now for 6 months. Nobody is predicting anything specifically great for either the economy or for earnings. So that gives you room to move up. And I think it gives you even more room if we get continued confirmation that the Fed is getting its way. I would point out, we no longer are in a situation where you have negative yielding bonds. There aren't any anymore, even in Japan, even in Germany. Like we're now in a situation where the normalization has, I wouldn't say come full circle and we're all the way there, but everybody understands that that's the program and it's global. And so I think the stocks getting accustomed to that and the mentality of a stock market investor becoming accustomed to that is the best development that we're able to talk about right now.
All right, so you can hear from him is that he is feeling that way, that now the market has accustomed us to it, and then that is why the market is actually going up right now. So again, everybody got own view. I'm just sharing across the board, and you make your own final decision, yeah? Okay, so another reason is because Tesla, as I told you earlier, right? So Tesla has been building up momentum recently at the 109 mark I mentioned at technical level, and the volume have been pretty impressive. At least it's much higher across for the last 10 over months. All right, so you can see right now the volume is doing pretty okay. There's a lot of DOJI formation. Now that means that we can see a 137 coming in if the market finds strength tonight. But if the CPI data come as a stunner, and that basically brings back interest rate factor fears into the market, then we can see coming back down to the 109 level. All right, so again, tonight CPI data is going to be very important. And of course, as I said, mentioned to you, the Tesla people, owners in China are still very unhappy with the price cut. And the thing is this, the China passenger vehicle sales rises, but Tesla sales slump by 41%. That means that more people are buying the EV cars, but Tesla sales actually slumped by 41%. So this is really not good. And of course, Tesla now has been building a production facility in Indonesia. Okay, so this is going to be very interesting. So all eyes is on tonight's CPI, okay? But the thing is this, even let's say we have a decline, which we expected to have because of the crude oil price, gasoline price is down, but is it enough to stop the Federal Reserve? I really don't think so. Really, I really don't think so. I think that Jerome Powell has already mentioned during his last sharing, and I think that he already said something else. So to me is that it's a bit of much reaction and overreaction at the moment right now. And to expect only a quarter rate hike on the next meeting, I think it's a little bit too early to call. But of course, we all know that at the moment now, the Fed fund rates, about 70% are looking at a 0.25 rate hike. All right. So of course, the 12% decline in gasoline is the main reason, and that basically drives the inflation lower. So that is where I want to question. Now, if let's say this is all on gasoline prices, then why Goldman Sachs is so positive on their view on crude oil? So if they are so positive and it really happened, and because they're Goldman Sachs, then what will happen to the CPI data? This is something that I really find very mind-bending, and to me it's sour. That's why I'm very concerned. And if you look carefully for the entire December, yes, the price of gasoline price did go down, but now it has rebounded back again. So are you telling me that now is, based on December is lower, but now January is higher, we just focus on December, while the current is actually higher right now? So again, all these basically needs you to be very careful. And do note there's almost double-digit inflation in almost half of the world. Oh my goodness. Ukraine now is about 26.6% inflation. Oh, that is crazy. And of course, like Zimbabwe is 269. Of course, we don't talk about this country. Venezuela 156, and even Poland 17.9, And I think that is, I can't really see, Belgium, I think it's the 15.2 and so forth. So all these things tells me that we are not out of the woods yet, at least in my opinion, yeah? And if crude oil price goes higher, I cannot imagine. So what is happening right now? Why am I so kind of like, very concerned? Because I just realized that Jerome Powell said this, and it just bring me back into this, okay? Let me tell you this, okay? So Jerome Powell actually said that bringing down inflation requires measures that are not popular. Now, why would Jerome Powell 2 days beforehand, before the CPI data, come out and talk about this? Is it because he has some information about the CPI data, or he knows something about CPI data, and that is the reason why likelihood there will be more rate hikes coming in? And already in his last the FOMC meeting, right, meeting minutes, they already very clearly says that there will be no rate cut this year. But Wall Street is still very into this. So if you look at the chart right now, guys, this is the technical of the S&P 500. This is A. And if you put as B, if you just string them together, you extend it, you have your C, which is a perfecto resistant. Then if you extend it down, you have D, then you have E, and now you have potential F, okay? So the thing is this, where's F right now? Well, based on that, we are about nearly about, which is about 4,000 mark. So which means that if S&P 500 hit 4,000, it will actually join and hit the F trajectory, I mean the ABCDE trajectory, and that is again a concerning factor. And of course, if you look at the resistance right now, okay, this is the common RSI resistance. You can see that every time we come to this area here, we will actually see a form of resistance. So again, I say that, right, S&P closed at 39.69, and the resistance will be at 4,000. So if you ask me, right, S&P 500 must take a sell position if it actually goes to 4,000 mark. Okay, if you ask me this question, I will say that once it goes there itself, right, be very, very careful at 4,000 mark. Now this is a very strong triangle here, and I strongly think that if it pulls back down instead, it will come back down to the 38.09 mark. Okay, so upside for tonight will be 4,000. Downside could be as low as 38.09. Okay, so that is my technical view for the S&P 500. And if you zoom in up bigger, let's take a look right now. You can see that. Okay, you can see very, very clearly now the resistance by the trajectory is very, very beautiful. So, and yesterday we can see that it went above the Morgan Stanley 3009, and it went above the 23.6 Fibonacci, 39.59. So that's why I say there is a possibility to see 4,000. All right, if not, maybe we can see 39.96 maybe. Okay, and then once he hits somewhere around there, it will be a good time to take some sell position. Okay, and the pullback can be as bad until here, 38.09 level. Yep. Okay, so that is the S&P technical view. All right, now what if I tell you that there is another big concern, which is what happened during the announcement of the Swiss National Bank details, right? You know that basically the bank came out and says that they lost about $132 billion Swiss franc. Okay, you must understand how can bank lose money, right? They can't lose money unless that they are having more problem than not. So the thing is that the Swiss bank has been basically at 0% interest rate for a very long time, okay, until recently they started to mount up higher. And the reason for doing that is because Federal Reserve actually increased interest rate from 0 to today 4%. So that's why the Swiss franc bank must also come in. The Swiss National Bank must also come in, because they cannot be too far away. If not, that will be a big problem for them. Because you must think about this right now. If let's say many people put their money with the Swiss National Bank, right, back then in the last 5 years, then after that, they noticed that the interest rate in US is much higher. So what would happen? People actually draw their money out from the Swiss National Bank and then move it to US because that's giving me more yields, correct? So if the thing is this, if the Federal Reserve is continuing going to increase interest rates, example, then Swiss National Bank will have to increase. But if they keep on increasing itself, right, they may come to a point whereby they will hit their bottom line. So no matter how I look at it, right, this Swiss National Bank could be a potential black swan event. And with the current interest rate factor now going around and it's so high, it's moving up, right, you can see from different banks, it's just a matter of time, right, one of these countries will get into some trouble. All right, I'm going to say this up front here, and I feel that this is coming in. So the US dollar is actually going in a very interesting formation right now. With the interest rate going up, this should be coming down, right? But you can see that the US dollar was being pulled down. Now, I feel that it was done on purpose because a lot of countries released the US bonds to the market, and that's why the bond price came off. And when that happened as well, the dollar also came off. So all I can say is this. I just had this nagging feeling that this is not the end of the dollar. In fact, this could be the start. If there's going to be any excitement in the geopolitical scene that excite the crude oil prices, that will actually bring the dollar back up again. And I'm going to say this up front. I still believe that the US dollar will form the base at about this point here, about 102 area. And then after that, it will be going up to 108. Now, I don't know when we'll be doing it, how long it will take, but I just got this nagging feeling that we are about there. And the consolidation around this area itself really justify what I feel so. But of course, again, people are still calling for sell. A lot of big boys are calling for sell on a dollar. So I'm going to just wait for 102 to come, okay? All right. So if you look at the bigger picture right now, if I expanded the view for you to take a look, you can see that the dollar really hits the Fibonacci level, which I mentioned, the 105, which is the 30.382. Once it sticks there, couldn't go higher, it pulls back. So it is possible to see this. It is really possible. So it depends on tonight's CPI data, okay? So watch out for that, yeah? Now, the thing is, at the same time, we can see the 10-year yield is just basically moving sideways. One day up, one day down, one day up, one day down. But again, I still stand firm on my view that we'll see the 10-year yield going back to the 4% mark again. Right? I believe that the bond price will come down. I still think that the market will basically run away from both bonds and the US stock market together. I know that this view itself was spot on last year, and I think that there should be a follow through for this year. So Goldman Sachs is the one. They're staying very bullish on the US crude. And one of their fund, right, Endurat fund, actually slumped 19% in a single week because oil price came off. So do you think that they will actually, think about this as well, right? This is quite pretty scary. So let's just hear for yourself why they are so bullish on crude oil. And if they really get it spot on, then what will really happen to inflation? I cannot imagine that. Let's look.
Is 90 for 1Q, and we think that the reopening gains momentum when you get into 2Q to 95. Now, because this is a faster than expected reopening, you add $5 more to that 95 to get you to the 100. And if we see those international aircraft get back into the sky and we see people going out of China and back in China, throw another $5 and you're to up to 110 by third quarter. So I think the key here is this is a big shift. And let's remember what reopening in the US and Europe did to oil and commodities. We're very positive on both oil as well as copper as you get the reopening. But I want to make another distinction here. There's the reversal of the zero COVID policy that impacts oil substantially like here. But when we think about copper, there's also the growth impulse, the stimulus going on in the property market, the reversal of the 3 red lines. That's also creating an impetus for copper. But I think oil's the true reopening play.
Okay, well, let's... Okay, so they are saying that right now, right, the chance of the crude oil going to 110 a barrel by Q3 due to China reopening. Well, I totally agree that China will reopen, and I agree that crude oil price will be going higher. But if you look at crude oil price right now, right, this is a very beautiful triangular shape, and we can see that the crude oil price has lifted off from the last low at $70. The last one is $72, and now it's basically touching around this point here, which is the Fibonacci, which is 38.2. So with all this thing on my hand right now, I just feel that, right, you must be very careful, because if the crude oil price really breaks above the $77 mark, right, the next target itself will basically go to as much as $96, okay? And this could be a free way up because it has broke the diagonal downtrend, and the indicator side is still showing that it could be a bottoming out soon. So to me, crude oil can really go to $96. And what could lead to that is, right, I mean, apart than just only China, I think there can be more. So that's the reason why you can see right now the VIX itself last night actually start to bottom out a little bit. Now yesterday during the MAO, I mentioned to you, right, if the VIX start to bottom out is very, very soon, and I said that about 20 you can start to accumulate. Yesterday the low was 20.62 and it closed at about 21, so up by 2%. So that actually tells me that, right, people are getting ready for tonight's CPI data, okay? And I still stand my firm position here. I still think that we'll see about 32 in the near term in about next 3 to 4 months. Near term will be 26, all right? 26 will be the first one. Then after that, 32 will be next, all right? That is my view on the VIX. And because of this, guys, if you actually look at this right now, this is actually from the FMRCO from Bloomberg Harvard Analytics fact check. All right, this basically from Fidelity. So this is actually the top 50 counters versus the bottom 450 S&P counters. This is a very incredible way of calculation. And you can see that, right, every time when the trend line get broken, that is where the recession will be coming in. And of course, the selling will be terrible. The last time we saw this was in 1973 to 74, and that, as you know, that was where the stock market came down pretty badly. And then after that, and there was inflation was really at the high. And incredibly, it happens again back in 1999, and that time itself, inflation was at a high, and of course, we saw the breakdown. We saw 2 years of recession, 2 years of downside, and recession for more than a year. So now, apparently, we are at the same point, in a way, in not exactly the same number, but the pattern actually repeats, and it's very possible that we are going to have a problem because our CPI data is at a high rate. So the same thing will happen in 1999 and 1974. So I believe that we are very, very near to something big. I don't know what will happen, but we all know that something happened back in 1974, 1999, something very bad happened, and then that became the catalyst of the selling. So I feel that 2023 could be really, really next, okay? So all you do is very, very careful, or if not, basically join my preview on the 14th of January, whereby I'm going to share with you, right, why Morgan Stanley is so negative on the market. I'll give you exclusive data and charts. I'll tell you exactly what's happening right now. And of course, now more than 80 people has already responded for this preview. And during this preview itself, I will be giving you the insights of the TWB basic class so that you can join us at a very low level, low entry level, so that you can know TWB better, and then after that, you join us for the premiere. And of course, we have results to show. Our traders are doing a pretty good job. Within 3 months, this trader has already made 15% very nicely every single month. And if you are really not into trading or you're very, very busy, you can do actually social copy from, again, let's do a social copy on this particular trader. Right, you can actually do that right now. So join the preview and I'll tell you more in details. And of course, don't forget, guys, leave a comment for today's MAO into my video so that you can leave it in the comment box so that you can win the chance to have lunch with me in the next Spin the Wheel Lunch with Kel. All right, so let's look at the chart for today, and you can see right now the chart shows brilliant information because I was basically repeating myself like a broken recorder. I mentioned to you that once the Dow Jones cross and breaks the KFC level, which is our TWB system, I'll tell you more on Saturday. Once it breaks above this KFC level, it will move to this point. And this point I mentioned to you was 34,053. Today's the high was 34,021, not too far away, good enough as a representative. So I believe that if the market is to go higher, it will go all the way to 34,432. If not, then this should be the minimum cycle peak right now. So traders, you need to be very, very careful. Nasdaq, same thing. I told you guys it's a very strong chocolate bar right here, and you can see that once the market couldn't go down, created a BNB, we are now here. And based on my chart, I believe that the Nasdaq is near a resistance right now. Let's look at the chart, shall we? Okay, bring in the Dow Jones. Let's take a look right now. Okay, hold on please. I think there's some connection issue. Just wait for a second. Okay. All right. All right, so the Dow Jones, basically today, the current level opening price was 34,000. There's a very important technical point at 33,962, which is happening right now. Now, the Dow has to stay above pivot 2 because that is our hallmark indicator. If the market stays above the pivot 2, usually we will see the market going back to 34,261, and that's pivot 1. Now, if the market really stays below 33,962, then the first support level, it will likely be 33,863 because that's the MLP level for today. But if you ask me, right, this is where the market broke above the BMB. The BMB stands for the big movement bar. RL is here, which is like trade is at 33,233. Any pullback low down here may see that. So I'm gonna say this up front. If the CPI data is good, based on this right now, there is a chance to see the market going all the way to 34,261 to hit the pivot 1. But if the market, the CPI data is really not as what everybody expecting, then a breakdown all the way to 33,481 is actually very possible. All right. So upside is about 300, downside is about 400 to 500 points. Okay. So traders, be careful on that. But at the moment now, both KSI and KRW both are in the positive side. So even there's some selling, the market should be able to take care of it. Now, the NASDAQ, as I mentioned to you, we have a BMB a couple of days ago, and the target is 11,500. Wow, very nice. So we are now basically about 110 points away. It is possible if the CPI data is good, then of course 11,500 will be easily taken out. But if the market failed and breaks below 11,356, then the selling can come down to first level, MLP 11,305, but I just feel that it will come down to MA30 at 11,148. Okay, so this one to take note of that. Yep. S&P 500, let's take a look right now. S&P breaks above the BMB RL 2 days ago, and now is hovering at the pivot 2 level. Very interesting. 3 of them, both Dow, Nasdaq, S&P, all of them is now very, very near trading at the pivot 2 level. Now, pivot 2 is a very peculiar position. If the market loses pivot 2 and OP, right, usually there'll be some selling. So 39.63 is the pivot 2 level. Any form of selling can bring it down to 39.47. But upside, we can see either 4005 or it can go even higher, 4020 mark. Okay, so traders, you just need to watch out for all this. KSI and KRW both are pretty positive, so the upside chance is actually there. Okay, now for Hang Seng, let's take a look right now. Hang Seng is now heavily resisted by the pivot 2, as you can see. This morning, Hang Seng opened at 21,703, and that was where the opening was. And the pivot 2 was 21,613. And you notice that once the market loses the pivot 2, the market goes into some selling. If I can show you the 5-minute chart, you can see this better. And that's the reason why I'm pretty concerned for tonight's pivot 2 with some of the US market. So you can see that initially the market came down first. Then it touched beautifully at KTR -2, a technical point. And then it just recovered all the way up to above OP. But once it goes down again, it goes below opening price and below pivot 2. You can see that the market just sell down all the way, nearly 350 points in just about 55 minutes. All right. So again, this is the impact of pivot 2, and that's the reason why I feel that you should be very, very careful when we have too many pivot 2s on the Dow, Nasdaq, and S&P 500. Okay. All right. So that is the Hang Seng. So let's hope that you can stay around this area. If not, right, the market can come down all the way to this 20,397 mark. Okay. All right. For crude oil, let's take a look right now. Crude oil today did a CCRY formation, but KSI is negative. Boys are selling, but KRW is positive, so it'll be a mix here. So to me, it's simple. The BMB support level is 76.56. As long as crude oil stays above 76.56, that means that it should be able to go up again to test 79 level. Okay, so crude oil, in my opinion, I would love to buy at 71.70, but we don't have chance. It didn't hit there. So if you want to buy some crude oil, you can buy a little bit right now, or just wait for the price to come back down to $71. Okay, all right. Let's take a look at the gold and silver market. Okay, a moment. Okay, for the silver market now, it did a new BMB yesterday, and now it's trading slightly higher at 23.59. Well, the upside potential is still about 24.86 level, but KSI and KCX, both of them are a bit negative right now, so may not be the best time to buy into silver. And of course, if the CPI data is not as good example, then of course there could be some turbulence on silver. And of course, will it be the same for crude oil? For gold? Yes, it will. And today is a DOJI directional day, As long as the gold stays below OP, all right, it'll be a sell. Above OP, it'll be buy. So today's OP is 1875. So now it's more to the buy side. So there is a chance to see gold going to 1906 figure. Okay, KSI is green and no blue bars. So overall, it's pretty positive for gold market. All right, and last two will be Bitcoin and this Ethereum. Now, I did mention to you that Bitcoin is consolidating, and I'm pretty bearish on Bitcoin, but I'm wrong. Today, Bitcoin came down, touched the MLP brilliantly, 17,501, and then it blast past pivot 2. Now, above opening price and above pivot 1 is always a buy, and you can see it marched all the way up to now going to be very near to the MA200 as 18,451 level. So what's happening now? What created this buying? Not too sure. Maybe it's end of the it's that people feel that it's cheap enough and people are coming to buy, or they feel that the storm is over. You know, there's a lot of reason for that, but I didn't research on this. But all I can say is this: you can see from my indicator, once the indicator from KCX blue to nothing, that is one of the hallmark of bullishness. And of course, when the market have KSI green, it double confirms it. And as long as the colors are yellow, you should just stay on the long side. All right. So pretty straightforward. TWB system is just about that: following colors, following what you're seeing on screen, and just trade accordingly. All right. This is Cal signing off. Remember to leave a comment. Thank you very much. I wish you the best for tonight's CPI. Bye-bye.